Clay McDaniel. I'm the Chief Investment Officer for Waverly Advisors. This is a good time of year to look back at the year that just ended, the quarter that just ended, and somewhat unique. I think it's useful to even look back a little further than that. When you look back to just before the election, a lot of markets moved after the election and then moved a lot in 2025. If you look back to that lens from October 1st to 2024, what you find, I think, is pretty interesting in that U.S. markets moved about the same as non-U.S. markets. It's been a good period. Dollar's about flat. Dollar's been a big story last year. It's down a lot in 2025. From that point, not a whole lot has moved. Long-term interest rates moved around a lot in 2025. If you look back to that period, haven't moved around a whole lot. That doesn't imply nothing happens or nothing ever happened, as the meme goes. But what it does say is that the market is taking a pretty broad approach to what's happening in the world and looking at longer-term structural trends. The market's not focused on the headlines today and what it means for next week or next month, particularly when it comes to technology and artificial intelligence, is looking at 10 years and 15 years. News can have an impact on that time scale, but it's pretty unusual to throw those trends off because of an individual headline. As we look sort of more towards the end of the year and we think about the fourth quarter, some interesting stuff happened. It's a pretty good quarter overall. Look at the market was positive, but you did see sort of a trickling out towards the end of the year, and what that was driven by was less headlines than it was what's happening with technology and artificial intelligence. More skepticism around high levels of spending, particularly from companies that are doing so through debt. Companies that have a lot of free cash flow are very popular, are being rewarded for their investments they're making. That's a healthy marker. It's a sign that quality is starting to be rewarded over just revenue growth, over growth at any cost. And that's probably the most interesting piece. And when we look forward to the new year, what we are focused on is it's actually a pretty low cost right now to diversify and to buy quality. We came out of Liberation Day last year. That washed a lot of froth out of the system. And since then, everything's gone up, and everything's gone up quite a bit. But you have seen junkier, lower quality companies outperform. And that's not unjustified when you think about, those companies are valued on hope. They're valued on what might be 5-10 years from now. There's value in that. That's not really what we look. The areas that we look toward for capital preservation to protect client assets, ordinarily you pay a pretty big premium for quality. Why would you pay the same for one company that's high quality versus another company that's low quality? The result of last year is that's a very low premium right now. And that's true in the equity market. It's also true in credit. It's true in private markets. So as we look across the board, across client portfolios, that's really the lens that we're focused on right now. Where can we upgrade on quality? Where can we protect capital? Where can we make portfolios more resilient? And you can do that in a lot of areas right now. In fact, I would say there's really no reason to take concentrated risk right now in the market. Diversification is there. There's attractive opportunities in so many places. Why wouldn't you take advantage of that? Because that's what the market's offering. What I'm excited about is the depth and experience of the Waverly team has never been greater. We're suited for purpose in this environment. We have extraordinary talent across every asset class. We have tools within public markets and private markets designed to meet the needs of every client. There is no one portfolio that works for every client. Everyone's goals are different. The definition of financial success is different for every individual that walks through our door. Our job is to sit with the client, sit with the advisor, and figure out, all right, how do we achieve your goals and how do we do it as safely as possible? And I think that's more important now than ever. Resiliency is an underrated factor in investment portfolios. We all want to get to the destination, but we don't know what's going to happen along the way. And we need portfolios that are built to ride out the unexpected and endure. And that's what we're trying to do at Waverly.